Hello traders, this is Blake Morrow with Forex Analytics, and you are listening to the week ahead video for May 28th, 2017. And I am excited about talking about this next week's video. We have non-farm payroll coming up this week, so it should be fairly exciting. Now, it is a holiday week for those of us that are in the United States. It's Memorial Day weekend. We also have a bank holiday in the UK as well. So things might be a little light to start off the week, but as we get towards the end of the week, things are sure to pick up. Now, before I start on the analysis of things that I want to cover for this week, I want to make sure that I do mention to our sponsors, yes, that is Forex Analytics, who I'm associated with. Hey, make sure you try out our analysis program. And if you haven't, sign up today. It's only $1 for 10 days. You can try it out, and then from there you can make a decision whether or not you want to continue on. But the analysis process of Forex Analytics is pretty dang cool, and the reason why is because it's taking multiple facets of analysis, whether it's macro, candlestick, basic technical, harmonics, Elliott wave, and lumping them all together so you can get a good view of which way the market is going. And like a good example here, as you can see, crude oil. We've got a lot of bearish analysis lining up, which if you get several different types of analysis lining up, that probably will help you make a decision on which way crude oil is going for this example. Now, a lot of times we get some mixed signals, which tells you to be a little cautious. So anyway, try Forex Analytics, give it a shot yourself, and also download the app on your iPhone or Android device, so this way you can get the push notifications and live streaming data all to your phone, which is ever so important for those of us that are trading on the go, that actually have other lives other than just trading. I know I do, and I'm sure you do too. Okay, so let's talk about this week, and let's talk about some of the what I think is important stuff that's happening. First of all, let's just start with the dollar. The dollar is, it's in a situation where it's been beat down pretty aggressively. Let me find the dollar. I don't know. I just lost it there. Oh, here it is. The dollar has been beat down pretty aggressively. We've watched it come out of this triangle formation. We had a rejection of the underside of this trend line as we got past the French elections, but still ultimately it failed. The dollar came down and the euro rallied, and we have stalled at the 161% extension of it's the December lows to election night highs, okay, of the dollar. We've been beaten down and got beat down pretty hard. Now the 618 retracement of like the longer term charts comes in just below where we're at, around the 96.40 level. I actually thought we were going to get there, but based on like the candle that we're seeing this week, what we posted, that's a hammer candle. That means we're probably going to get a bit of a recovery, and I would think that a recovery back to 98.50 is probably going to happen, and it's not going to be pretty if we can do it. I for one don't want to be too short the dollar down here, as I think we might bounce back and maybe find some resistance through here, and work off some oversold conditions. But that means that maybe towards the end of this week, depending on what non-farm payrolls are, if they're a little weaker than expected, it might turn the dollar back down. That's looking pretty far ahead, but just kind of a setup that I'm thinking. All right, now with that being said, let's go take a look at the euro dollar, because the euro dollar, we've on a massive bullish run here, and the euro dollar has stalled a bit, and you notice the all week we've just had a really tight trading range. I do believe a break below a close below 111.70 is going to produce a pullback towards 110. Now 110 would be the 618 retracement of the move that we saw, in May to June, basically, or all of May. You can say the low of May, and we're going into the beginning of June. I think you're going to see a pullback of that move back to 110, which might provide an opportunity to be on the long side for those of you that are waiting to get long some euros. Because if you look longer term, the euro dollar is in, here, let me go over to the longer term chart. Whoops, here we go. We're in a down channel, but we're probably going to get to these highs around 114, but we might make it down to 110 before getting to 114 first. So I would think a move down here, then a rally back to 114, which would set up a longer term short or a longer term dollar long. Now, I'm not 100% sure looking forward that the dollar is going to have that type of confidence moving forward, but it's just a thought process. And the reason why I say that is I'm going to take you over something a little different right now. I'm going to take you over to the bond market. Have you guys watched bonds recently? I mean, if you're not watching bonds, you should be, and at least the 10-year, whether you're looking at, the 30 or the 2-year treasuries, the boons or the bobbles or whatever. I think you should really be paying attention to at least the US 10-year treasury, which I'll tell you, so many bond bears are out there, and I look at it technically on top of, fundamental reasons too, but technically it actually looks pretty bullish. We've got a nice little bull flag. We came out of an ascending or a descending wedge here. We also have like a bullish wedge setting up. The 200-day is right there at resistance. What if that breaks? Well, if we break through those highs around 126.20, the bond market's going to rally. And if the bond market rallies, that means yields are dropping. If yields are dropping, that means the dollar probably is dropping as well. So that's important. Now, why would that happen? Well, maybe there's a little bit of risk aversion, and you say, "Well, Blake, what do you mean risk aversion?" Well, what the? We haven't seen risk aversion. We're at all-time highs. Well, that's the problem. See, if we're at all-time highs, why aren't bonds why isn't the whole market just dumping bonds right now to buy stocks? I'm sure every bond trader is probably scratching their head too, wondering the same thing. All right, so with that being said, the bond market, a rally there, what is that going to do to dollar pairs? Maybe something like the dollar yen. I got to take you over. I'm going to go back to the S&P here in a second, and we're going to talk about stocks, but let's go over to the dollar yen really fast. And notice the dollar yen, and we've got a bear flag pattern setting up. And today we tried to close below that support. We didn't quite do it, but it's still setting up quite nicely. And again, if the dollar yen is very closely correlated to equities, and that's why I wanted to bring up what that looks like. So if you see the S&P here, okay, this is the S&P. We're closed at all-time highs, and by the way, I still think in the S&P we can see 24.25, which is near the 127% extension, maybe up to like 24.44 or 24.50, which would be 161% extension. We have a massively divergent relative strength. You can see that right here. Okay, and we also have that on Forex Analytics. But one of the things that I want to do right now is I really want to, show you guys the fact of the matter that the yen pairs are not following what we're seeing here, and that's why it's important to know that we're seeing this divergence. So what I'm going to compare it to, let's compare the S&P to the dollar yen. Okay, let's start there. All right, now notice that the S&P is rallying, dollar yen isn't. All right, now let's compare a couple other yen pairs. Here's euro yen, here's pound yen, here's Aussie yen, here's New Zealand yen, New Zealand yen, here's Canadian yen. Okay, now if you notice these yen pairs and you notice the S&P, well, the S&P is just running really hot right now towards what we could call channel resistance. Let me get rid of, I didn't want to do that. Get rid of that. Okay, I wanted to get rid of these fibs here. So you'll notice that we're up against channel resistance, and then we have these yen pairs that aren't moving with the S&P. Well, what happens? When we typically have a very strong correlation that's really broken over the last year, what happens if the S&P comes down? Well, my 2 cents would be that the yen starts to strengthen, or the dollar yen falls and the yen starts to strengthen, maybe even across the board. Because if I start looking at some of these other yen pairs, like here's the euro yen, okay? Here's the euro yen. We have a double top, okay? Let's go over to the pound yen. Here's the pound yen. We have a bearish pennant playing out. I mean, if the S&P starts to roll over, these are just going to accelerate. And really, that to me is probably the most important thing that I think we should be paying attention to, because if the stock market does find a top, which I'm not saying it will, but if it does, and that S&P does hit, resistance up here, and we start to see us rejecting some of these, these levels after this divergent relative strength, will the yen start to strengthen, and will the dollar yen start to fall and drag down all the other yen pairs? That to me is what should be in focus for this next week. And that to me is something that I think you guys and gals should keep an eye on. So remember, if you don't use Forex Analytics, make sure you try it out. At least $1. It's less than a third of your cup of coffee that you get at Starbucks, just to try it for 10 days. Download the app as soon as you do that, and see if you like it, see if it's for you. And for the rest of you that are already Forex Analytics subscribers, thanks for your patronage. Thank you for supporting our company. Thank you for supporting our daily webinars that we do for free. And speaking, one last thing, if you guys, speaking of the daily webinars, if you didn't listen to Friday's webinar with Nick Trades and myself and Steve Vulgaris and Dale Pinkert talking about the UK elections, pay attention to that, because the pound is grossly underperforming right now. And with the elections coming up here on June 9th, you're seeing the pound already start to weaken, and maybe that's a show that Brexit isn't going to be so easy for the cable, for the UK. So make sure you go back to our YouTube channel, subscribe to our YouTube channel, but listen to Friday the 26th webinar that Dale Pinkert posted. All right, that is going to be really a key one for you guys to listen to, especially going into the next week when we start debating in the UK and we start seeing some polls come out. All right, guys and gals, this is Blake Morrow. You have been listening to the Week Ahead video. I hope you have a great week.